A big move is coming, and we're already down by 8%. But history says we want to prepare now. After a relief rally, we have to be mindful that after this pattern starts or a bearish engulfing weekly candle, the average decline is 16%. So is this time different? Because it kind of seems important we're aware of this. If we look at the summertime after a strong start to an election year, we normally see weakness too. So sell in May and go away. Come back maybe at the end of June. All right. So I think it's really all about the Magnificent Seven. We're going to be rounding out earnings with Amazon and Apple this week. What are they going to tell us? Because right now we note that we got a fail on the chart. We have a monthly fail breakdown. We're below resistance. We're below a pivot. And we're even below support, which means that we're in a monthly lower low, currently below the low. And we know that if we're going to reverse, we're looking for a failed breakdown, which we see here, right? I just showed you. And then we have to see us closing over that previous candle high. That's going to be a pretty tall order for the NASDAQ right now. Why? Well, we basically have to go back to all-time highs. We would have to get back above 448 this month. If not, we're likely going to form more consolidation. Look, this pattern's really reliable, and I'll update you on when it happens. But what I want to tell you is that 4 months ago, like basically at the end of December, I said, hey, we're in extreme greed. It's a great time to manage risk, which means setting stops, raising stops, and trimming. So let's go back to the chart here because, hey, if we're below the previous candle low on the monthly, you should at least be running a stop, right? Trimming, exiting, whatever that means. I think if you want to be a prudent investor, that's what you should be doing now. You want to look to reposition. So what exactly does that mean? Well, this failed breakdown pattern is happening in a lot of places. We see it on the weekly chart for Microsoft, for Amazon, for Tesla. But we got some terrible charts out there too. Look at Meta. Woof, right? Yes. So could we see some weakness into the summer? Absolutely. And we know exactly what we're looking for. Levels, right? We're looking for support and resistance. Please make sure you stay tuned till the end of the video. I'll give you an update on these two trades that we talked about, SPY and QQQ. But since we're closing out the monthly candle this week, I also want to bring you back to my bullish template from the end of 2023. And hey, this worked like a charm, but I also told you what proved me wrong. I had some assumptions. The uptrend holds and no lower lows. Well, hey, we got a lower low, so I'm getting evidence I'm wrong. What proves me wrong? A monthly lower low closing below the low. We don't quite have that yet on the S&P, and we're still only about 3% off our all-time high, but we are currently above support, and we're stuck between our pivot and resistance, which basically means that I'm getting some evidence, but not confirmation that we could be going down. All right, so it's really all about the Magnificent Seven, and this will be important because right now, more than 75% of companies have beat. 81% of companies have beat, delivering an upside surprise. This will beat a 10-year average. Whoa, maybe it is 1995. And the Magnificent Seven influence over the S&P has never been greater. So it really matters what we hear from these big guys, notably Apple, Amazon, but also have SMCI and AMD on Tuesday. Oh, right as we're closing out that monthly candle, yes. So Apple's going to report, and it's going to really matter. Here's the expectation, a 1% miss on earnings. And we're hearing that they need to launch a true low-end iPhone in order to revive growth. All right. And huge discussions with OpenAI. They want to power their AI chatbots in iOS update. That's really significant. All right, if you could please consider smashing that thumbs up and subscribing to the channel. Thank you so much ahead of time. I appreciate your support. So it's really about AI, and I want to see if Amazon and Apple can deliver, notably Apple. So as they're talking about that, we also hear that Apple iOS 18 features they will highlight at WWDC are based on in-house models. Remember, when is WWDC? Oh my God, it's the end of June. Oh my God, that's WWDC, right? Let's start trying to put the pieces of the puzzle together. Okay, this is looking interesting. I'm not sure if it's going to happen either. It's just what I'm trying to do is lay out a roadmap or a template. Amazon's going to crush it. This will be the best of the pack at 11% beat for earnings. And if we look at the 1 week performance for the entire market, we note that a lot of blocks are green, but there's some red. So Meta, Google, Microsoft, Apple, Amazon, all in focus. So let's go through and see what happened this week. We had a lot of fear and greed. We bounced off getting close to extreme fear, but a lot of stocks are still in fear. They're scared. Here's Microsoft, right? Sales profit beat expectations on AI demand. Boom. Alphabet beats revenue estimates as AI fuels cloud growth. Boom, AI. But Zuckerberg asks for patience as Meta's AI push spooks markets. Okay, so talking about AI and being successful means that you're going to go up like Google and blue sky territory, or you're going to drag up the chips like NVDA. Microsoft's green on the week, but not very much. But Meta's deep red. So we see that AI is really important right now. And this is at a time when the Magnificent Seven earnings have arrived and we've wiped out almost $1 trillion in value. But BNY Mellon tells us that buying this dip is better than cash. So after a huge wipeout, nearly $1 trillion, hey, they're buying the dip. And this firm, I think they manage about $2 trillion. They see the S&P topping 5,400 and if economic strength persists. All right, so we just talked about Amazon. We just talked about Amazon and Apple. But because chips are so important right now, and we just talked about how important AI is, AMD and SMCI report on Tuesday into the last calendar day of the month after the bell. So into the close of this month and the open of May, a lot could change, right? A lot could change. But what's really important is that we're managing expectations into earnings. TSMC already slid 7% as they talked about concerns over chip outlook. Okay. And SMCI went down by 23% and dragged down NVIDIA by 10% after they pre-announced earnings and did not provide financial results. So everything's going down. And since we don't hear from NVDA for, I think it's until like roughly mid-May, we want to be mindful of what AMD and SMCI say. We also want to be mindful of our psychology or our emotions. Are we getting very excited or very scared? All right, let's think about this because things could change, right? The Microsoft and Google dips were for buying, but not all dips are created equal. Here's some headlines from this week. Salesforce bets even bigger on AI. Okay, cool. Demand for Microsoft's AI products is extremely strong. Okay. Self-driving firm Pony.ai aims to go international. All right, competition for AI, but it looks like it's going international. New merger creates UAE space AI firm. Whoa. SoftBank is going to spend nearly $1 billion to develop its own AI model. All right, the race is on. And inside the China-US competition for AI experts, it seems like this AI thing is really important. It does. So what we want to know is whether we're going into a dip, which is normal, a mild correction, or a correction. So what I'm trying to do is prepare you for the worst case scenario. So if that doesn't happen, hey, happy surprise, right? We're averting going down. I think we could go down. I think we're seeing evidence we're going down. And please be mindful that not all dips are created equal. If we start getting more evidence, and here it tells us that after ending a 5-month win streak, we normally are flat on the 1 month, but normally higher 3, 6, 12 months out, which goes back to that story I've been saying. I'm seeing evidence, but not confirmation, which means, yeah, it's a bearish thumbnail, but I'm still bullish, right? There you go. Oh my God, right? This guy's a flip-flopper. Yep, I want to make money. I'm weird. All right, so now let's go to that thing we talked about before. And thank you for watching all the way till the end. So we talked about the NASDAQ a lot. Here we're going to talk about our dip recipe because we're talking about the 50 DMA stopping to go down, hollow candles, and then going up. So the levels we have here from our trade alerts, we're currently up by about 1.2 and 1.8%. We're nearly at a trim as well. But to make it simple, the stop and target are here on the chart. So the reason why I like this is because everything I showed you, if we go down to the stop, it means, hey, that's bad. Weekly lower lows, probably it will be a monthly lower low. That's bad. Let's not try to make that more complicated than it needs to be. Same thing for the NASDAQ. We go down and hit the stop. Man, that's bad. There's no way to try to spin that. That is not good. And what I would also note is that we got awfully close to the stop zone here, right? So I would like to see us get awfully close to the target. Otherwise, the bears are stronger on the push lower than the bulls are on the snapback. If it's just a snapback dead cat bounce, I would expect we're going to reject somewhere between the 50 DMA and roughly 518. So I would say this is the rejection pocket. And like I just said, how close we make it to the top is going to show how strong these bulls want it. I just told you there's all this bullish momentum building up. AI spend is going crazy, right? Everyone's spending money on it, burr. So let's see what happens. Did SMCI lower the bar enough to now beat? Is AMD going to say something bullish? Or are we going to go down the slope of hope? I think that's really important. So without going any further, that is today's video. Make sure you watch the one queued up on the left-hand side, and I will have an update on the broader market out tomorrow on Sunday. If not, maybe you want to subscribe and come hang out with me at 9:15 and 9:30 a.m. on Monday morning. Thank you so much. I'll see you on the next video.